Welcome to Alpha Insights. I'm Juniper. Today we're digging into the cannabis sector, a messy mix of bankruptcies, state enforcement, federal policy moves, and some interesting clinical data. My guest is Aiden, who follows the space closely on social. Aiden, glad to have you. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks for having me, Juniper. Happy to be here.
Okay, quick snapshot. Headlines drove trading today rather than earnings. Tell us the most consequential item you saw.
The big corporate headline was Cannabis moving towards shutting its Denver cultivation as part of a Chapter 15 process tied to about $270 million of debt. So, the real question here is what that says about leverage in a business that needs capital to operate.
Right. Chapter 15 can pause creditors, but it doesn't mean operations keep running. For listeners who aren't legal experts, what should they take away about that filing and the operational closure?
Chapter 15 is a cross-border insolvency tool. Analysts note it can buy time for restructuring, but it doesn't guarantee a rescue. Practically, this closure is a reminder to look at cash runway and balance sheet stress. If a company can't cover taxes, rent, or supplier bills while it's leveraged, assets can be shuttered even if product demand exists. On the state side, Michigan regulators ordered a permanent license surrender for an operator after inventory discrepancies and out-of-state transport were found. Meanwhile, a coalition of hemp businesses in Missouri filed a federal suit to block a ban on intoxicating hemp products. When you look at the data, compliance and traceability systems are becoming table stakes for operators.
So enforcement can range from shutdowns to courtroom fights. How does the policy picture stack up? Any tailwinds there?
There are a couple of policy pushes worth watching. The United Food and Commercial Workers publicly backed a federal legalization bill, which adds organized labor support to the political case for reform. And Alabama has a hearing scheduled about rescheduling that tracks federal moves. That union backing can shape messaging and legislative momentum, but state responses will likely be uneven.
Let's pivot to the science and product headlines. There were two different studies today, right?
Yes. First, a federally funded trial reported that a THC and CBD combination reduced agitation in 9 out of 10 dementia participants. That's encouraging on a clinical front, but the sample is tiny, so analysts say follow-up studies and regulatory pathways matter a lot before commercial impact appears. Second, a design study looked at smoking formats and found that cone-shaped joints deliver more THC per puff, while cylinder joints burn slower and take longer to finish. It's a reminder that product design can change consumption patterns and dosing.
Interesting.
Yeah, that's a good point. Clinical wins broaden the medical use case, but commercialization depends on approvals, dosing standards, and how regulators treat those products.
If you're watching the tape tomorrow, what should traders and longer-term watchers be monitoring?
Focus on a few concrete things. 1. Federal policy headlines. Any movement on the Cannabis Administration and Opportunity Act or White House guidance can spark state-level hearings. 2. State enforcement updates and court rulings, like the Missouri hemp lawsuit, because those change the addressable market overnight in some states. 3. Company filings for liquidity signals, cash runway, debt maturities, and tax exposures. 4. Clinical follow-ups or regulatory filings tied to promising studies. And 5. Watch the names and ETFs that track the sector. For context, think of Tilray, Curaleaf, Green Thumb Industries, Trulieve, and the major cannabis ETFs like MSOS, which tend to move on policy and company news.
Got it. How should listeners parse the noise? Headlines can be loud and volatile.
Prioritize fundamentals and context. Look at cash runway first, then compliance posture, and exposure to states with aggressive enforcement or changing rules. Analysts note that restructuring risk is real for operators with high debt or unresolved tax liabilities, So treat policy progress as a longer-term tailwind, but enforcement and liquidity as nearer-term risk drivers. Honestly, I was a bit surprised by this one. You can have positive policy signals and still see firms struggle operationally.
Mm-hmm.
Right.
Before we wrap, a quick reminder. None of this is personalized investment advice. We're highlighting what analysts and filings suggest and pointing out what to watch.
Exactly. Use these points as informational inputs, not a recommendation to buy or sell any security.
Okay, 3 quick takeaways for listeners.
1. Watch liquidity and debt. Companies with stretched balance sheets are the most vulnerable to shutdowns. 2. State enforcement and legal fights are the main source of near-term volatility. Traceability and compliance matter. 3. Policy and clinical progress are constructive for the long run, but will play out unevenly and slowly across states.
Great. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for joining, Aiden.
Thanks, Juniper. Talk soon.